Now, the best stories, the stories that worked, the stories that moved us, were stories that were in alignment with our own priorities. These guys had done their homework. When they came in, they knew exactly what we were looking for as investors. And even if we weren't investors, even if it was just a simple business plan competition, each competition, just like each fund, has a theme. So if the theme is innovation, if the theme is social impact, if the theme is outrageous ideas, when you pitch to me, whether I'm an investor or a judge or a mentor or a simple part of the audience, pitch to me keeping the theme in mind. If I'm a clean energy fund, do not sell me something that increases the carbon footprint of your product or your idea on this planet, right? Um, and we spoke about the voice of the customer earlier. The voice of the customer doesn't just work with respect to the customer. The voice of the customer is a great tool that works just as well when you walk in and pitch to an investor, to a venture capitalist, to a fund of funds, or even to a panel of judges at a business plan competition. Do your homework on the competition. Do your homework on how you would be graded. What is it that these guys are looking for, and make sure that you touch those points. If you do a good job on that side, there is a reasonable chance that the person sitting on the other side will actually realize that you've done your homework, you've come prepared, you know the answers to the questions that I haven't even asked, and which will then hopefully open up the room for more interesting interaction and discourse. So if I formalize this, and if I sort of try and see if I can build a framework around what I've just said, in essence what I'm saying is that all audiences have certain expectations. Right? All audiences have certain expectations. When you come in and present and pitch, if your presentation is in alignment with those expectations, there's reasonable chance that this conversation will go forward. Right? And when we talk about the fact that conversations go forward, this could lead to another appointment. This could lead to another introduction. This could lead to a reference. This could even lead to a customer order. So if my expectation is strategic fit, so I am a telco player and you are coming in to pitch me on your content and your content library, then pitch me on the fit. When you come and present, make sure that your presentation is focused on the strategic fit. Don't make a generic or general presentation. On the other hand, if I'm a telco and I want you to make a generic and general presentation because I want to evaluate and assess the idea that you're presenting in isolation with the value that I create and that I bring on the table, then do a generic presentation. But be very, very clear before you walk into that room, when you start that conversation, be very, very clear about, are you pitching and presenting a strategic fit? And are they expecting a strategic fit? Or are they expecting a generic fit and you need to prepare yourself for a generic fit presentation? Right? Take the telco example further. If I'm looking for value-added services, show me how doing this deal, this transaction will get me value-added services. If I'm a telco who's doing this investment as part of my social impact program, show me how doing this investment will allow me to increase my social outreach. Right? So meet my expectations. If you meet my expectations, you open the door for more interaction. If you don't meet my expectations, I want this conversation to end as quickly and early as possible and move on to someone who does respect my time and who has at least done the homework to meet my expectations. That's the second piece. Now, in terms of presenting, there are a number of other common mistakes that I see again and again when I see a pitch. And the biggest mistake, and one of the ones that is actually common irrespective of whether you hear a pitch in the Middle East, whether you hear it in the Far East, whether you hear it in the Asia Pacific, in North America, or in Europe or Australia, right? And this mistake is the market size mistake. So here's how our presentation starts. We've got a great idea, we've got a great product, we've got a great team, we've done a lot of good work, we've rolled it out, we are at point X where we have customers, we have revenue, we want to take it forward. And then you say, if you look at the overall total market size, the global market size for this business is 100 billion US dollars a year, and if I would only get a percent of this, I would be a rich man and you would be a very, very rich investor. Okay, doesn't work. That's not how. This is not how it works. This is not how it should be presented. When you pitch and when you present, show me your addressable market. And when I say addressable market is the market that you can reach. This is the market which is within your reach. Now, when I say within your reach, this is a market that you can get to. This is a market that you have access to through your network, through your profile. You can figure out how or what doors you need to open to get here. But the addressable market is a market that you can actually talk to. Addressable market is a market that you can actually go ahead and pitch to. Right? So if you come out and say that the global market for this is 100 billion US dollars, that doesn't mean anything. All it means is that you haven't done your homework enough to get to a point where you can make it real or make it credible. And if I talk about addressable market, if you remember one of the first few examples that we started off with in our earlier sessions, when we said, somebody comes out and says, I'm going to focus on FIs or financial institutions, but this includes both insurance companies and banks and funds and asset managers, right? So I'm going to work on FIs, but I'm going to work with banks. But banks have large banks, mid-sized banks, and small banks. So large banks, mid-sized bank, and small banks. And I'm going to work with small banks. But small banks, also come in a variety of flavors, where they could be 1 billion plus, about 500 million to 250 million in size, under 100 million, or under 50 million. So I'm going to work with the guys who are in the 50 and the 100 million range. That also works. Then I'm going to work with banks in the 100 to 150 million range who actually have a risk or compliance requirement. Right? And their risk and compliance requirement is about $500,000 US dollars a year, because this is what it would take them to build a risk team and implement a risk system. So if I could do something for them that falls in the 150 to 200,000 USD a year, I can save them a substantial amount of money. Okay. And at last count there were, let's say, 1,000 such banks in the US. So now the addressable market is what? The addressable market is 1,000 banks who can spend $500,000 a year. And if I do it this way, then I'm saying the total market size is about $500 million a year. Okay. If it's 2,000 banks, it's $1 billion. If it's $1 million, it's $1 billion, and so on and so forth. So you get the idea, right? Now, even this is not addressable market. So if somebody comes out and says, the global budget or the global spend or the global IT spend or global technology spend, global system spend for risk systems in the world is 200 billion US dollars, that does not mean anything at all. Doesn't stand for jack. But if I bring it down to this point, this helps. But even this isn't specific enough, because you're saying, I'm based in the Far East. Of the 2,000 such banks in the world, about 1,500 are in the US or North America. Do I have access to these banks? If I don't, then this is not part of my addressable market. So who do I have access to? I have access to the other 500. You know? But these other 500 are sort of spread across 80 countries. Do I want to open or establish an office or manage relationships or work with people across 80 countries? I may not necessarily want to. So, your statement may start with the global market is 200 billion, the North American market is about a billion, which is what I'm looking for. The North American market for small banks investing in risk technology is about a billion, and if I can do that, that's great. If not, then the non-US market is about 500 banks spending, let's say for a second, $1 million on this, which is about $500 million. That's my addressable market. So from a mechanics point of view, if you had two pitches that come in to you as an investor or as a judge or a plan, and one said 200 billion US dollars, I get 1% of this, I retire rich, big cross, doesn't work. Somebody else comes in and says, there are typical small and mid-sized bank spends about $500,000 on this. So that's the amount that they've already allocated and budgeted, and would be more than happy to look at an outsourcing solution if it saves them about half this much. Then the spend that a small mid-sized bank is going to allocate to something along this type or this line of solutions, 250,000 US dollars a year. There are 900 such banks in the Far East and the Middle East. Through my partnership network, I have access to 400 of these banks. These are banks where I can walk in tomorrow and ask for a demo, ask for a presentation, ask for a meeting with the chief risk officer, with the CFO, with the chairman of the board, with a member of the board, or even with the regulator. And of these 400, typically, if I look at market A, market B, and market C, there is an intense regulatory pressure to go out and comply with risk management requirements. So there is already an external driver that's pushing bank for buying my solution. All I need to do is go out and create awareness that this product is out there, that we can deliver on the promise of this product, and that their saving is about 250 USD a year. If I can do a good job in presenting the analysis that I just presented, a certain percentage of these customers will convert. And if I look at historical closing trends in my line of business, in the markets that I'm operating in, if I take these qualified sales calls, the qualified sales call conversion is about 5%. So if I take 400 of these and close 5%, I make 400 sales call and close 5%, then my overall conversion ratio is about 20 customers. And 20 customers worth paying $500,000 a year is basically 10 million US dollars a year, and that's the number that I'm focusing on. I need to get to this number. Once I get these 400, I can figure out how to, once I reach out to these 400, I can figure out how to create or increase my conversion ratio from 5% to 10%, 10% to 15%, 15% to 20%. So an analysis that comes out and presents market sizing at this level of detail is a lot more credible than an analysis that simply comes in and says, global IT spend is $200 billion, I get 1% of this, I retire rich. That doesn't work. So bear that and keep that in mind. Now, the second most common mistake that I see, and that I really, really hate as an investor, as well as a judge, as well as a mentor, is that when the underlying business model that you have is dependent on a network. So you need a group of buyers and you need a group of sellers, or you need a group of students and you need a group of teachers, or you need a group of people who have jobs and you need a group of people who can help complete those jobs, right? So buyers and sellers, students and teachers, uh, contractors and freelance resources. And the theme of the plan is that, you know, if you get one, you'll get the other, or technically speaking, you should be able to get the other. So in these types of ideas or presentation pitches, the primary question is, how are you going to seed the network? What's your rollout plan for seeding the network? And if you talk about the fact that, you know, I've got buyers and sellers, and, you know, there are 10 million buyers, sorry, there are 10 million sellers in the world, and there are 10 million buyers in the world, and they are all going to come and work on my platform and join me and pay me a joining fee and pay me a transaction fee and pay me an annual fee, doesn't work. You have to have a really credible plan on figuring out, are you going to get the buyers in first or the sellers in first? And if it's the buyers, what would drive their motivation for coming onto your platform? And if it's sellers, what's their motivation for coming onto your platform? And if you expect them to pay a fee, you know, what's the rationale, what's the justification for collecting a fee? What's the economic rationale for them to come out and pay you $1 or $2 or $10 or $50 or $100 for that matter for coming in and joining your network, right? The third mistake that I see on a regular basis as part of presentations is when somebody comes in and says, the 800-pound or kilo gorilla in my space does it for $250 a pop. Given my technology, my strategy, my approach, my resources, my design, my architecture, I can do it for 150. And this by itself is enough for customers to switch in large numbers to my platform and make me a rich man and, you know, kill this guy, or at least significant damage to the guy. It doesn't work. If you're looking at cost savings, you need to look at order of magnitude. And if you, especially if you're selling an enterprise system, there has to be a really strong push or shove or incentive for an enterprise customer to come out and join your platform. And it has to be something other than just cost. These guys, yes, everybody cares about cost at some point or the next, but in the long run, what they really care about is reliability and dependability, and the fact that you would not make them look bad. You're not going to make them look bad in front of their board and in front of their senior management team. So if you make a statement that a customer is going to switch on account of cost, please be absolutely positively prepared to defend that assumption, and ideally think about other reasons why a customer would switch, other reasons why a product is superior, other reasons why a product does such a great job. And I'm sure there would be many. If you put your hat down to it, I'm sure you'd be able to come up with a fairly long list of stuff that you can actually go out and work with. In a number of investment committees, in a number of business plan competitions, number of regional competitions, there is an element, or there is at least some discussion about how is your product innovative. And then sometimes, you know, what exactly is your competitive advantage, or a slight variation, which is how is your product different from the competition, right? So this is a variation of the discussion that we just had. Cost is not enough of a differentiator. If you say my product is cheaper, not enough. My product is cheaper and faster, maybe. My product is cheaper, faster, better, certainly. product is cheaper, faster, better, leaner, meaner, easier to work with, and gives you a huge, significant, substantial productivity boost. What stuff that used to be done in 10 hours can now be done in 10 minutes. That makes a huge difference, right? So sometimes when people ask, and judges ask, or investors ask about how you're different, you actually need to be very, very clear across the full range of dimensions that are out there. From an innovation point of view, if you come out and say, I do it faster, or cheaper, or better, or more or at least in a more productive fashion, these are all empty words. I need to understand how. So what was it that these guys were doing wrong? And what is it that the new guys, which is you, are doing right? One. And then what's stopping these guys, the old guys, to look at what you've done, understand how this works, and simply go back and fix their model? What's stopping them from learning from you, improving their product offering, and going back to the customer and saying, look, if you were thinking of switching to the new guys because they gave you this, well, here's news for you. We're giving you this for free. So that sort of just completely kills your initiative and your sales pitch. Right? So when it comes to innovation, please don't come out and say my product is innovative and stop. When it comes to innovation, please come out and tell me, here is what the old guys did. Here's the reason why it's wrong. Here's the reason why we don't think that they will be able to replicate our strategy and approach. And here's the reason why we think customers would really love what we've done and switch. Okay. This is a much more robust explanation or description of why you're innovative, what is your competitive advantage, and why your product is different, than simply coming out and saying that we think we are innovative, we think that we've done a good job, or we think that our product is better. So I hope this short list of mistakes that I've just covered is useful, that it allows you to come out and create a pitch that has both impact and that also moves your audience, moves them enough to give you what you want from them, whether it is a check for an investment or a large customer order. Please remember that when it comes to pitching, the basic rules are the simplest rules. These are the rules that we've covered in the first session and thereafter. And the primary rule, the one rule of thumb that I want you to really, really remember is, I have a tendency of doing this, but I think I should write this out once and for all. The basic rule is that when you interact with anybody, whether they are a customer or a judge or an investor, please respect my intellect. Please respect my intellect by putting in the time and the effort of making a great pitch, of thinking through the challenges and the issues that your business model represents and solving them before you walk into my room and present and pitch to me. And when you present and pitch to me, please don't tell me. So lesson number 1 is respect my intellect. Lesson number 2 is please don't tell me, please show me. Lesson number 3 is don't make tall claims without backing them up. And rather than building a top-down $200 billion 1% estimate, please build an estimate where you start off with one customer. Make me understand how this transaction works and drives. Where is the value in this transaction? Who captures the value? So who captures this value? And then help me visualize and see how big this market is. If you would even put some of these lessons to work as part of your presentations, I'm sure you will see a significant and large difference in your pitches and your presentations, both in terms of the feedback that you get as well as the conversion or acceptance rate. Uh, Thank you very much for your time. I hope you enjoyed yourself. This is Jawad Ahmed Fareed signing off for financetrainingcourse.com. Thank you for trying financetrainingcourse.com, an online collection of risk, Basel, treasury, and portfolio management resources created by risk and treasury professionals.